Is it really over? Or could the president have some larger plans that could continue to make some major market moves over the next few weeks? MarketBeat's Thomas Hughes is here to break down some of the massive headlines that have come in on the financial markets in just the last 24 to 48 hours. We're going to dive into those. But later on, we're going to get to the three sectors where Thomas says retail investors should really be focusing right now, especially the biggest sector with the strongest potential for growth, no matter what the president has in store for the next few weeks. So, Thomas, let's just start out with addressing some of those huge headlines coming out of the Davos meeting. Let's talk about starting out with that big reversal on the tariff threat over Greenland. What kind of impact have we seen in the market in just the last 2 days?
So, earlier in the week, the market sold off pretty hard because the president has raised new fears of trade wars with some tariffs related to his push for Greenland. Since then, he's kind of walk back those threats and the market is rebounding. It looks to me like a buying opportunity in a market that's trending higher. We have a new buzzword that's emerged, TACO, T-A-C-O, Trump always chickens out. Trump gives the market some fear and then he backs off whatever he said. The market, not a big deal anymore, and it moves higher. But what I would want to point out, though, in this whole, TACO scenario, he's backing off on this thing. But what he's really done is forced a conversation about an area where investment can happen, regardless of what happens with Denmark. I don't know if he really cares if we own it or not, so long as something's done about it. There's plenty of opportunity for resources and trade routes and, defense positioning, lots of opportunities. So in the end, the result is that he's forcing an issue. It seems like NATO and Europe is kind of responding to it. We should potentially see some increased investment along that avenue, along with other investment avenues that he's opening, which is just pushing that long-term outlook for growth, which is what's driving the stock market today.
I think that goes back to the first question I mentioned when we started this video, and that's, is it over? Is this situation resolved? Or what can investors kind of expect to see over the next few days and weeks?
Oh, I don't think it's resolved. I think what we can expect to see is more volatility. Trump is bombastic. When he's not getting his way, he's going to come out in public and say something to try to move the opposite side. It makes me think of something he said way back in the first campaign, which is like, what you see me doing in public and what you hear me saying on TV is not what I really want to be doing. So it's all shuffling and game playing and feints. So we'll see what the end game is. Right now, it seems to be a boost to investment activity globally, which is good for stocks.
Good for some stocks, bad in other areas too. There's some different developments geopolitically that are interesting to talk about. We're going to talk about those too, but I do want to let you know we are going to get some useful information here for retail investors. So stick around. Thomas is going to share, but no matter what happens in the market right now, there are some indicators to look at in these three sectors that, despite the ups and downs of what is said and what country does what next, these sectors are going to be really strong, especially the last one. This is the biggest growth driver in the market right now, again, despite all volatility. So we're going to get to those three in just a minute. And Thomas, before we get to those, I want to talk about kind of the question of the market reacting so strongly this month to what the president says and then his pullbacks. We saw that so much last year, looking back at the big April stock market dip that we saw last year. But as the year went on, most of last year, we saw fewer huge reactions from the market, even though the president was still saying different things or changing policy decisions, some of that TACO situation that you were talking about. Right. But the market didn't react quite as strongly towards the end of last year as we saw this month. Why do you think that is?
I think the market was starting to get past the fears of last year. Last year's volatility had kind of passed. And so now this is a renewal of volatility. Took us by surprise a little bit, but I think ultimately the response wasn't all that bad. And what we're seeing in the wake of this news seems to affirm the long-term outlook, which is that the S&P 500 is in an uptrend. It's being driven by an outlook for earnings growth. And right now the trends are positive and we're expecting to see new highs.
Thomas, let's talk about what you're looking at specifically, despite all of the noise and all of the changing headlines that might be coming. What are you looking at for investing right now during this season specifically?
Right now, big tech is one of them, NVIDIA included. So last year, middle of last year, late last year, the analysts kind of had a reset where they were starting to slow down on their revisions and there was some concern going into the market. But a lot of the stocks that saw some downward pressure from analyst revisions have seen a reversal inversion in the trends since December and the first part of the year. So many of these stocks that had seen institutions selling, analysts kind of cooling down their sentiment, now have more bullish trends. Institutions are reaccumulating. Analysts are starting to lift price targets, especially for like NVIDIA and AMD. These stocks are being led robustly higher by large double-digit amounts, and that's being supported by the growth outlook. NVIDIA's growth outlook is still yet to be realized. I mean, every quarter they outperform. The guidance suggests that the coming quarter will be another strong outperforming quarter, and that trend has just been going and going and going. So as far as NVIDIA and the AI bubble goes, it's going to continue to rally and trend higher, I think, until we see really a top in this growth outlook, which really isn't there yet. And then coming to AMD, AMD is expected to launch its MI450 later this year, which is going to be a huge boost for its growth based on the supply and demand metrics that we've been tracking for the last year. There's enough demand for GPUs and AI for AMD to sell as many as it can, NVIDIA to sell as many as it can, and still not meet that demand. So we're looking at a pretty strong year of revenue growth and sales and earnings growth for both of these companies this year.
Even though the rest of the market was really pulling back on Tuesday with some of these headlines that we just mentioned earlier, AMD was still going strong. And I think that goes to show that there is a lot of market excitement about what they have ahead. NVIDIA is a little bit of a different story. I think we need to talk about the pullback that NVIDIA has seen really since late last year. Are we starting to see a turnaround and a full recovery? A lot of retail investors have been wondering, when is NVIDIA going to start to gain back that momentum?
So NVIDIA's kind of been struggling with profit taking. So up as much as it was, with the rally kind of broadening into a broader array of tech stocks and a broader array of sectors. Investors that were positioned in NVIDIA are taking profits to put that capital somewhere else. So that's been capping gains in NVIDIA. But I see that situation ending fairly soon and reverting back to a more accumulatory stance that would help lift the stock over time, simply because of the outlook. The upcoming results are going to be another blowout. The guidance will be another blowout. The news cycle since the last release includes new deals plus new investments in future growth. So we're going to see a lot of catalysts emerge, for this company and for other AI-related companies as this earnings cycle develops.
So focusing on earnings rather than headlines. I know that's kind of a similar theme with the next two sectors that you are talking about and some specific stocks in those sectors for investors to focus in on. Before we get to the second sector, I want to talk a little bit more about NVIDIA because we just saw the company's CEO at the Davos Summit. He delivered an address to the world leaders yesterday. Anything interesting out of that investors can really hold on to?
Right. So the biggest thing I think coming out of Huang's comments at Davos was his view of the AI bubble. He says that it's not a bubble, that the investment cycle is required to help advance technology. Right now, we're in a massive upgrade cycle, not just this new niche technology. Eventually, everything will be edge capable, AI capable, cloud compatible, integrated with AI.
Yeah, one of many of the headlines that came out of that speech yesterday. A lot of moves yet to come in big tech. So interesting to see that that's the mainstay, despite the volatility that might be ahead of us. Let's get to this next sector, and it's one we very recently talked about on the channel. Why is this one an area that you're looking at as stability despite any volatility or headlines that might come?
Well, right. So you would think that geopolitical instability would be the driver for the defense sector. But really what it is an expectation for increased defense spending globally. So in the U.S., which is the largest defense spender, we've already increased our budget for this year. The president is calling for another increase for next year, which just really underpins manufacturing, labor markets, as well as the sector itself. If you look at these charts, these stocks are rocketing higher over the past few weeks. This is driven by a combination of their results, plans for defense spending, and then just plain old momentum. Money is piling into these markets. These charts show a clearly accelerating market, which to me indicates that the rally in these names have really only just begun.
Yeah, absolutely. These charts have seen wild growth in the last year. I think we had a video on just yesterday talking about the top 10 defense and drone stocks to look at right now. One of them was up over 500% in the last year. Many of the options on this list were up 200 to 300% in just the last few months. So huge jumps for a lot of these companies. We also have an article out right now, the top 5 defense players to look at. You can scan the QR code or click the link in the description. This is a really interesting interesting read that takes a deeper dive into some of those defense names that are seeing so much growth right now and whether they'll continue to see that growth in the future. Thomas, let's talk about some of the specific names that you're looking at in defense right now as kind of those stable options in whatever happens geopolitically or with headlines right now.
Teledyne stands out. It recently reported earnings, was another blowout, and gave pretty solid guidance, all underpinned by defense contracts, also by unmanned vehicles, which is pretty critical. That's part of the drone market. To me, Teledyne is a pretty critical player in defense, but also industry in general, because it's an enabler. It's not making like the final products per se, but it's making a lot of the opticals and sensors and components and electronics that allow these products to work and do their jobs. So as technology advances, Teledyne's going to be right there in the thick of things, providing and advancing these technologies for defense contractors, but also for industries.
And Teledyne is one that's also seen a lot of growth recently. What are your thoughts for this one and really any defense sector stock that's seen these huge jumps very recently? Is now a time for investors to be getting into these names?
Well, right now, it looks like these markets are accelerating. Teledyne itself, its price action has accelerated for 3 weeks consecutively. So this, to me, is a market that has cash flow rushing into it. We might see it top out soon, but to me, that would be a point of consolidation. At that point, we would want to watch and see if the market moves sideways or if it contracts and pulls back a little bit. But in either case, to me, that would be the signal to buy. That would be the opportunity for the market to kind of cool off, give us a chance to see, well, is there going to be a pullback or a consolidation, and then wait for the next move to come after that.
All right, so Teledyne is another great name. It wasn't on our list yesterday. I know there's a couple other defense tickers you wanted to throw out before we move on to the final sector, which is again that most exciting growth area to look at with a lot of momentum right now. But what are those other couple of defense names that you have for our viewers today?
Well, two that really stand out are Northrop Grumman and Lockheed Martin. Northrop Grumman also has exposure to the enabling technologies, but also to larger defense systems that would use those technologies. And then Lockheed Martin is just the U.S.'s largest defense contractor with its fingers in all parts of the pie. Both stocks are rocketing higher. Both are supported by their results and the outlook for defense spending. But to me, even more importantly than that is the cash flow and the capital returns. These defense stocks tend to buy back their shares aggressively and pay pretty high quality dividends. So with a robust outlook for revenue growth, earnings growth, and cash flow, we can expect these capital returns to continue to flow as well and to potentially accelerate in their growth, which is another driver for the stock prices.
All right, very good. We did talk about Lockheed Martin yesterday, but we did not mention Northrop. So great to have another new name for our viewers to look into right now. Let's get on to that last and final sector that you are looking at as really the biggest growth potential, the momentum area right now in the market.
Right. So this isn't so much a sector as it is a class of stocks, and that's the small cap stocks. So if you look at the Russell 2K versus the S&P, the Dow, the Nasdaq over the past few weeks, the major indices have been struggling. We've had some pullbacks. The S&P at this time is below its recent high, pretty flat for the last 4 or 5 weeks. The Russell and the small caps is advancing. It's set new highs. It's broken out of a consolidation. The chart shows 3 white soldiers, which is a strong continuation signal. It's the same signal we're seeing in the defense stocks. So to me, this is a confirmation of what we've been talking about for the last almost 2 years, which is that the broadening rally, the expansion into small caps, and the potential for them to lead this year.
Yeah, we've definitely seen a huge amount of growth in some of these stories. There is always volatility in small caps too. I think that's important for investors to note. And you'll notice that in a couple of the names that we're going to mention here in small caps. But I want to hear, what are those standout small cap names that you're watching right now that really any of these headlines, any of the potential volatility probably won't impact the growth that we're seeing in these couple of names?
The number one that I'm watching right now is Amprius Technologies. We've talked about this stock many times. They have battery disrupting technology, the silicon anode architecture. It's in high demand by drone companies, by defense stocks. So this is a battery play, a technology play, a small cap, and a defense play. Has multiple tailwinds for it. What we're expecting in the upcoming report is for them to reaffirm ramping production, ramping sales, We're going to see outperformance. We're probably going to see hyper growth in the triple digit range and forecast for this kind of performance to continue. Right now, the stock price is in rebound mode, and I would not be surprised to see it retesting its recent highs, if not before the upcoming report, then shortly afterwards.
Yeah, this is a name that our viewers continue to ask about week after week, and it does illustrate that volatility. We've seen this stock in the last year reach new highs and drop pretty low, and then struggle to get its way back. I think where it's at now, there's still a lot of upside ahead, according to that consensus price target, and even on the higher end, there's some larger targets for potential upside for this stock.
Yeah, I think as far as the analyst trends go, right now there's potential for a good 50% upside, new highs for sure, and for this to continue, because I would expect to see these analyst trends continue following the upcoming release because of the strength that we're looking for in the report.
Well, this is a great first name in the small cap sector to look at. What is one other name to leave our viewers with of a small cap that you're watching that can weather any volatility from headlines or geopolitical news that might come?
Well, I don't know if it can weather the volatility, but I would say that the uptrend will remain intact, and that would be MP Materials. And we have this rare earth play. That market corrected pretty hard last year, but we've seen a bottom. We're in rebound mode now. Recently moved above a critical resistance point where it's consolidating and showing more support. What we have driving this company and this stock is its advancement of its mines and its operations, government support, deregulation, and accelerating and improving outlook for revenue and for earnings.
Yeah, this is a great name to look at right now. There's a lot of momentum after they hit that bottom, like you said. But I do wonder, like you mentioned and kind of alluded to, can this one escape the volatility? This name specifically seems like it could be tied to more volatility or announcements or headlines that might come geopolitically. Is that true of MP, or is this one a name that is really going to rely more on the business and the fundamentals and the growth and demand out there?
I think this one's going to be more about the fundamentals and its advancement. This is more of a domestic play. So, certainly, politics, the macroeconomics are going to affect the market. But I think, generally speaking, it's insulated from some of this international turmoil that we're seeing lately. Just a matter of time for it to produce the catalyst needed to get the stock to start moving higher again.
If you missed the bottom on MP, is now still a time to get it on the way towards a new high?
Yeah, I think so. Technically speaking, we're right off the bottom. We've only just now kind of confirmed that reversal. We're in consolidation at previous resistance, what is now a support level. So we're going to want to use that level as a target or a trigger point for entries. Being careful and small, doing small nibbles, and then waiting for the stock to advance and watching the news flow for follow-on entries.
A great discussion and a great list of stocks to look at that can weather whatever volatility might come in the next few days and weeks ahead. Thomas, thanks for the discussion today. Let me know what you think in the comments about any of the names and which names you're looking towards for more stability. And if you missed our defense video yesterday, make sure to check out the top 10 names in defense that we're looking at. It's 10 stocks in just 10 minutes. Take a look at the new format and let me know what you think too.